All right, in 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Oh, now I'm hearing myself on YouTube. But welcome to another edition of the Tim and John Show. I hope you guys enjoyed some of the throwback episodes that we had for you. And even though it's been a while since we've had new content, you can keep up on every article we save throughout the day by joining our Discord. You can find the Discord link using a bit.ly link. So it's bit.ly, all lowercase, /Tim John Discord. And that's where we go. We save our articles. There's just a plethora of articles. And if you know someone who's trying to get an economics degree, you should tell them to save like their $20,000 to $100,000 a year, and they should just follow us for free, and they'll probably end up learning a lot more. And even guys like Elon Musk even admit that college is just for fun. And I'm sure that both John and I couldn't agree more. Also, wanted to point out that we do have a podcast exclusive episode with Dr. Judy Mikovits that we actually shot on March 31st. A former co-host of mine at Change the News didn't want any part of that episode airing at all. So what I did is I ended up editing that person out. And because, we talk about such things like, taking vitamin C. So YouTube probably wouldn't allow that. So you guys can find that by checking out my podcast, which all the Tim and John shows are there as well. And the video is also on float.app /Liberty Advisor. It's also on Library TV. I tried posting on a BitChute, really did. And the video uploaded pretty quickly, but then it's been processing for about 8 days now. So, for everyone who says, just upload a BitChute, I've been literally paying BitChute, I think, like supporting them like $15 a month for probably the past 15, 16 months. And I can't even get my videos uploaded there. So anyways, but the most important thing is subscribe to us in other places because we can't rely on YouTube always being around. And for you guys wondering why I've been MIA, I had a whole video on why I was MIA. I had a whole bunch of things going on. I posted that about a week or two, and also thanked all the amazing subscribers that we had, and very appreciative for everyone who has given us some love and who has, been there and with positive comments for everything that myself and John are going through. And, John, if you want to get into, maybe, some of the reasons why you had to step away for a little bit, and then we can get into all the articles that we had.
Yeah, no, for sure. It's been quite the time for me as well. My dad passed away on the 5th of May, and it's been kind of whirlwind because I've been sitting at home trying to plan the funeral and everything over in Norway while, a lot of my family's in other countries and not being able to attend, the funeral itself. If I were to go over to Norway, it would have actually taken me a month and a half just to be able to do something in Norway because of all the corona problems. There's a 2 month, 2 week, quarantine in Norway, and then you gotta stay there for 2 weeks doing stuff, and then it's another 2-week quarantine coming back to Canada. Meanwhile, I would not have had corona or anything, and of course it's getting pretty frustrating, all these things, but it's been a lot to deal with, and now of course it's all the financials. For those of you that have dealt with family members that have passed without having an actual will, and having 2 businesses and also working for someone, it's quite the amount of forensic accounting to do. So I'm still in the works, and of course you got to deal with the Norwegian government, which has just been atrocious. Of course, you got to be up early in the morning here because it's 7 hours ahead of us here, like where I'm at Central Time. So I tried to get a hold of the Norwegian tax authorities to get a whole bunch of stuff from them. And of course, you call them, even when it's an hour before closing time, they just can't take your call, and then they hang up on you.
And they work till 3 o'clock too.
Well, it's really funny. It's 9 till 3. Who works 9 till 3? Come on, you guys are insane. They should instead, work from 7 till 9, and then open up again when people is home. It's just really hilarious, dealing with all this, and you get a deal. I actually had to send in documents to actually get the executor status and all that stuff. And they, of course, didn't accept digital signature, which is one of the few departments that doesn't, apparently, in Norway. So I dealt with that. And then I actually tried to set up a bank account in Norway to, get money transferred to me. But believe me, if you are don't live in Norway and can't go to the bank, you will not get a bank account. So you need an actual Norwegian address, and you need to stay there. So actually, because as soon as I move out of Norway, I'm registered out of country, right? So automatically, you put in your we have a different version of the SIN number. You actually have your like a 5-digit SIN number together with your birth date. So that's how they do it in Norway. And you put that in as right away, they're declining me bank access. So I have to send it. So it's really funny, and dealing with banks, it's just like so atrocious, Tim.
Yeah, and you had more government incompetence too, where there was some sort of law where you only have like 6 months to go.
Well, and actually, talking about that, we've been pushing back on that. Yeah, so it's basically after you cremate someone in Norway, there's 6-month time when you have to have a burial of a person because of Norwegian law. With it's really weird and complicated. I was like shocked when I heard it, because here in Canada you could keep your ashes and divide them up, do whatever you want with them.
So you can't keep them in like an urn or something like you would.
Oh no, they got to be buried. It's by law in Norway, and but we actually been pushing back because this Corona garbage. It's we've been working, and they're now like saying like, oh, we might be able to make what do you call it, in a not assumption, what do you call it, whatever, like they need to do that. And so it's been quite the ride over here, and long days, because you get to be up at 5-6 in the morning, and then I'm working late with my regular job, and then also I'm also doing economic stuff. I created a couple of reports lately. One on interest rates. I don't know if you've had time to see. You probably had not had time to see it, Tim, but I actually sent it to Discord. So, but we'll talk about that and a whole bunch of other stuff right away. But yeah, so that's what's been going on. It's been a lot of work and a lot of stress, but you get through it, and there's nothing you can do about somebody dying. So, you gotta get a move forward with life, and that's what we're doing, and we're pretty excited. I'm very excited to work with Tim, and it's fun to work with somebody that is equally as passionate about a topic that Tim is. So we really look forward to start to put out more content, coming a lot more often than we used to, because both me and Tim had a lot of things happening, but now things are starting to get a little calmer, and things are coming together. So we're able to now and forward really focus on some more good things, and I'm pretty excited, Tim, to talk about, especially now. Like, it's just been ridiculous. Like, since we've been gone, Tim, the amount of craziness in markets and central banking, and now, of course, with all the crazy rioting around in the United States, I think it kind of struck a chord, with the totalitarianism of governments everywhere, and people are really starting to have enough. Like, look at China, throwing down, shoving down laws down the throats of the Hong Kong people, all this stuff, happening around the world. Meanwhile, you have to social distance. And
did you see Trump? Did you see where Trump started like kowtowing to China, or to China, and was saying that now Hong Kong isn't going to get some sort of special favored status? And so, it's just what a joke. I mean, everything is basically being poised to make the economy great until the next election. But there's a ton of articles to go over. We're probably just going to cover a lot of these headlines, because we don't even have time to get into all of these. And so maybe this will help put a smile on both of our faces, because it's just so ridiculous. So if we go to my screen over here, it says, Paul says, and I'm going to read off a couple of these and we'll go back and get our comments afterwards. But Paul says, Fed policies absolutely don't add to inequality. While we've got hedge fund CIO, we have reached the point where the entirety of future prosperity has been pulled to the present. Yeah, I couldn't agree more on that. The smart money continues to sell stocks and buy gold as retail investors go berserk. And then we have over 9 million U.S. families fear they can't afford food next month. But the only article that I actually, wanted to really kind of really kind of go into was actually this one, where it shows that the net short future position e-money futures was actually a 3 standard deviation type event, which is, I mean, what is that? There's like a 0.5% chance of that happening once you're 3 standard deviations out, I believe. And it's also saying that with the bank's private high net worth clients not only selling stocks for 7 consecutive weeks, but last week's recording the largest week of equity selling since June 19th. And what were they buying? They were actually buying gold. And so it's just, I mean, John, so what do you make of the statement that when Powell says that the Fed's policies absolutely don't add to inequality? I mean, that's just such a pants on fire type statement.
Yeah, that's just the biggest lie ever, because the more money you print, and so this is how it works, right? You print the money, and then you actually have money available for the upper class, like the 0.01% at near zero, of course, and then you peddle out loans to the to those in need, giving them 5, 6, 7%, or especially the credit cards that are out there, 19 to 24, 25%. It's called the interest rate apartheid, and by doing that, they will create more and more inequality, because now you have the elite there, they could accumulate mass amounts of currency, buy assets way up front, and then you have to fight over actually buying assets with a way higher amount of loan in percentage wise an interest rate than everybody else. So you, like, over time, that really creates a bigger and bigger gap and push it between the rich and poor. And of course, those who can have access now to the bailout money and the billions, of course, they will have a good time. Meanwhile, they shut down basically small businesses around the world, where here in Canada they're talking about as much as 25% of businesses will be not reopening when the time comes, because they just couldn't afford. They were just too tied up with mass amounts of debt. Canada has been on the forefront of debt. Then of course Norway, Australia. You had the UK and a couple others that really have had a tremendous and a massive amount of debt that they had. And it's been pretty interesting, because it's the whole Ponzi scheme with we talked about this, how you create money, and you create money and then you create debt. Look at the Canadian government. It's just been appalling. Like lately, I've just been sharing a couple of charts with people that it horrifies you if you know what you're looking at. And that's the central bank balance sheet here in Canada. And Tim, if you want to actually I'll share it here right on the screen, because I can share as well. So I'm just going to share you something here, because this is just appalling and crazy and insane. We're going to go and take a look at Canada's balance sheet here, and take a look at this, Tim. This is of course Bank of Canada's own website. But take a look at this one here. This is a detailed, breakdown of their assets. Treasury bills, you could see, are zero, repos, and then they started repos actually a little bit earlier than everybody else here.
Doesn't look like they're flattening the curve to me.
So. Yeah, no, this is like I guess they didn't take precautions in the economy to have to flatten the debt curve, as it's called here. That I don't think they're gonna ever be able to flatten the debt curve. It's just.
Weren't you saying that their debt has basically gone up as a percentage almost more than anybody, or or at least in relation to GDP? I forgot what you were telling me the other day, but it just seems like Canada's out of control.
Yeah, no, the actual, so like the debt is ridiculous. Like what they're looking at is the government here is spending $250 billion this year in the deficit. Well, the actual deficits, which I've been horrified about, was $30 billion. So you're looking at there, like, what is that, like eightfold increase, Tim? Or is it, no, it's more like 16, I believe. If you can, yeah, I think it's about 16 times. So 1600% increase and in the the debt levels on the annual basis that Canada has seen, and 30 billion was a new record deficit ever back like last year, but now we're looking at 250 billion, which is just ridiculous. And as you can see here, the added repos that really, like, the bank, and this is meanwhile, we just had a whole like a wide array of articles coming out, and You should buy the banks in Canada as the strongest in the world. They're paying great dividends. And meanwhile, something has happened here. Like, take a look at this. So like back like in January, they're doing, $30 billion worth of repos, which is, they're still bailing out banks. But then over the last, so we go back here, this is February. February is actually still, not too much. And then it actually sixfold, like we go to March. This is when, coronavirus started to hit. And as you can see, there's $64.7 billion in repos. And then certainly, like, look at this hockey stick here. It's 187,000 billion in repos. And as you can see here, you can't even see, like, it's very hard to see, but you see up here, it's over 200% here. Increase 220 something percent.
And that's like more than even what the Fed was doing during QE3. I mean, and then Canada is only like a fraction of the size of the GDP of America.
It's a tenth. It's a tenth, right, of the size of the GDP. It's probably even a little bit less, but it's ridiculous. No, sorry, it's a tenth in population. So the actual GDP is a little bit lower than that, of course. But don't quote me on those numbers. But at least it just shows you the monetary. Like I just posted this and said, Bank of Canada has gone monetary insane. And that's for sure. Like what they're doing there, Tim, let me just I got to show her, because this is the craziness here. And of course, over in the US, the Fed is doing very similar things, of course. But, here's the market operation programs that are currently undergone by, the Bank of Canada. So you have like the overnight facilities and operations. So you have the standing liquidity facility, you have the overnight repo. So there's a whole bunch of different overnight lending facilities that they have, both to corporates and to governments. And then, of course, they got their term facilities. So this is basically where they buy term repos. Like, remember how, like, I broke, like, when was this? Like, way back when they started to actually just don't do overnight. They started to do actually term repos where they
that was around like December. That was around like December timeframe, I want to believe.
Yeah, and exactly. And then, of course, like here you got the contingent term repo facility, term repos, and of course, just blatant asset purchases. So this is where we're going to see, and this is like we haven't really seen a spike in these asset purchases. Like the repo is the one that really has spiked everything. But as we're going to have, as the repo kind of dries up and they need to start to actually buy these assets, because they just can't, like, this is very similar to what happened with the Fed, where, they started to have to go into terms, and then they just started the actual outright purchases on a mass scale, of course. And this is where, the programs that they have in place here is interesting. They got a couple of programs there. They got the Bankers Acceptance Purchase Facility, and they got the Canada Mortgage Bond Purchase Program. So that's mortgage bonds that they buy directly. And then they got their commercial paper purchase program. They got the corporate bond purchase program. And then they got the Government of Canada bond purchase program. Then they have the provincial bond purchase program. So the same as the states in the United States. So they're buying provincial government debt because they're bankrupt mostly. And then they got the provincial money market purchase program. So basically, this is just ridiculous. Like, it's just baffling, like, the amount of programs that they have in order to prop up the economy. And the more you try to bail out institutions and you just get into more debt, like you see actually the monetary levels are not dissipating. They're not going down, Tim. You see, like, if you go and look at the US, M1 and M2 and Canada's, everybody's rising. And here, let me just show you before I let the word over to you here. But we're going to go and look at, like, this is live, so you could actually see where trading economics is a great to get numbers. But of course, a lot of these numbers are fake anyways. Of course, the United States doesn't even have M3, which is, the total money supply. But you can go and take a look here. This is Canada's number, like April numbers. So you can see here, they're still increasing. So this doesn't look that bad, but this is the problem is it's only like the last year. So if you actually go 25 years, now you're starting to see a steeper, quite steeper curve here in the current monetary supply. So the money is trickling into the actual economy. Meanwhile, actually, the central bank's balance sheet, I just want to show you this one, because this is the craziest one, and this is only April. Like we're in March right now. Now most of those programs that we were no May, sorry, most of these programs have really started to ramp up now. All these purchase programs that the central bank has. So like this is horrifying enough. Like if we actually go take a look at this, Tim, what do you think about this chart? Like this, you got to see this. Like this chart is just unfreaking believable. And it's nobody is even close. Like the Fed is up like what 41% increase in their.
When was the Canadian central bank first established? Do you know?
It was like back in the, hold on here. Actually, we might be able to here. Just 1 second. Bank of Canada.
Well, anyways, I mean, the point is, it took the entirety of the Bank of Canada to, basically until like a year or two ago to get to $1 trillion, and then it takes a matter of weeks to go from 1 trillion to 4 trillion. And the thing is, I mean, all of this stuff was already baked into the cake. They were doing term repos going back to December. And I hear like some sort of feedback, so I don't know if it's like another YouTube thing that you might have in yours, but the other thing is, I mean, they're doing all the repo stuff is going crazy. I mean, going back to September. And so, I mean, all this stuff was baked into the cake. And I think that this whole coronavirus was a very convenient excuse. And do you mind if you just flip it back to us so that way the viewers can see us for a little bit while you're looking at
actually here we'll
1934.
Yeah, 1934, I believe. Yeah. So it's but yeah, it hasn't been long for chartered in 1934. So yeah, exactly. No, it hasn't been here for very long. Like the Fed, of course, is 1913. In a hidden meeting, it got chartered, and the Federal Reserve Act came into place actually on what was it, like
December 23rd. So exactly. back then you only needed to have, you didn't have to have it was just a majority on the floor, and there was like 3 congressmen on the floor when it got passed. Anyways, that's a whole other rabbit hole that I don't want to focus on today. But the point is, it took all this time just to get to 1 trillion. It took from 1934 to basically a year or two to go to get to 1 trillion, and now they're at 4 trillion just in the span of a couple months. But all this stuff is baked into the cake, and what drives me nuts is like we basically don't even get like any credit for being right in this, because people are like, oh, well, it's, everything's going great if it wasn't for the coronavirus, when all this shit was already going on way ahead of time. And that's why, I uploaded a video to YouTube on February 20th, which was the day after the all-time high in the S&P 500, talking about how it would be the corporate bonds. And then historically what happens is you have, during a recession, you'll have about 30% of corporate bonds will get downgraded from investment grade down to junk, and then that's going to create this whole wave of things that are basically going to be unavoidable, which then brings us to some other articles we have over here. So I'll go back to my screen over here, but this is touch on some of the ones we'd already mentioned off. But we've reached the point where the entirety of future prosperity has been pulled to the present, and that's what they're doing. So the Federal Reserve they're getting money to the richest people in the world first. The average person basically can't even get access to credit, even if they have excellent credit, because banks are only willing to lend out on government-backed small business administration loans right now in America, which is why then like all the smart money right now, the high net worth people are selling stocks right now to all the lemmings, being the retail investors. And then you got hedge funds who are like, oh shit, we're getting beat by all these retail investors. And so, another thing is the bursts have hit a 35-year low in America. Obviously if things are going great, more people will be having kids, but kids cost a lot of money. And guess what? You're not having maybe we'll have a Corona baby boom, but who knows? But yeah, retail investors are getting crushed. Our retail investors are crushing hedge funds again. Hedge funds have never been more concentrated into the same handful of stocks. So what the hedge funds did is they basically said, okay, well, all the retail lemmings are piling into here. They're making us look bad, so we're going to go pile into there too. And so it's all, the names that you'd expect. So it's like the MAGA stocks. So, Microsoft, Apple, Amazon, Google, Alphabet. Well, I guess, that's the same thing. Did I ever say Apple? I can't remember. And then, going back to some other articles over here, and we're not reading through these because, it's just, it's just so ridiculous on so many different fronts over here. Only a matter of time before developing market stocks unravel in a truly unruly manner. And yeah, I mean, guess what? They're not going to let Donald Trump just cakewalk through this next election. They're going to hit him on every single front. It's something that I knew right out of the gates. And so for those of you who've been following us from the beginning, which is not very many of you, definitely appreciate it, because I mean, podcast episode number 1 was what they're going to do to Trump is what they're going to do to Nicholas Biddle, which was the second Federal Reserve. It wasn't Federal Reserve. Technically, it's the second central bank of America. That was around 1837-ish. And you had Andrew Jackson, who said, "You are eternal den of vipers," or "You're a den of vipers. My eternal God shall rout you out." And then they had a guy who tried to assassinate him. Both guns misfired. And then the second central bank chair at the time was Nicholas Biddle, and then he pulled the credit from the country. I mean, they didn't have Twitter back then, so it's not like Andrew Jackson could just go on and tell people what was going on. And so they messed with him big time. And then I said that was going to be the game plan, where the Fed was going to do something. I mean, all they need to do is pull back some of this credit, or say they're definitely not going negative, right? In September or October, or they're already trying to kick off all the race wars. And this is not an episode about the police, but that would I'm sure John and I could go on for a long time on that, but we're not doing that rabbit hole today. Other articles over here. Let me get back to the screen. It's not. Let's see. Blah blah blah.
Actually, there's a couple more too that just are breaking. For example, just before you talk about that one, Iran's fuel reaches Venezuelan stations. 5th tanker headed to Caribbean, it says, because that is another thing, because they're basically Venezuela had their refineries breaking down because of the hyperinflation, and now they have a second hyperinflation over there. Now, of course, Iran, they're shipping the oil all the way to Iran, and then coming back from the refineries in Iran back to Venezuela. It's pretty ridiculous, like the not being dependent on, like, they're the biggest oil reserves in the world there in Venezuela, and they've destroyed their economy completely because they were, they love their oil, and they were totally dependent on it. It's funny, actually, Tim, in this book here, The End of Freedom, Power, Monetary System and Slaves, it was back in 2014 when I actually wrote, if you want to just get back to that article, I just want to mention this quote that I have in here, because it's pretty interesting. But yeah, if you want to just cover your article that you wanted to put up there, Tim, I just want to mention what I said about Venezuela, back in 2014.
Oh, and that would be the same Venezuela that guys like Michael Moore during 2014 was sending out tweets saying, they're such a, basically a model for the future of what we should be adopting over here. And hopefully, I'm not sure if I pulled up the right, I've got 3 computer screens in front of me, so I'm not sure if I pulled up the right article or not. Let me go back to it over here. But only a matter of time before developing market stocks unravel in a truly unruly manner. And you know what, for a lot of our clients right now, we are super heavy into cash. We're willing to be patient right now. I think it's just, not because I think cash is some great thing to be in, but you know what? I think some things, when they do unravel, that we're going to be the beneficiaries of that. And, my speech at Anarchapulco 2 years ago was highlighting how the words crisis and opportunity are the same symbol in Chinese. And so, I'm not, saying woe is me, and, there's not ways to profit from this, but, ultimately, I'm not I'm trying to profit off this disaster. I mean, just trying to make sure you're in the least worse off position over here. And then we have majority of Wall Street expects stocks lower in 3 months, braces for second wave of the virus. I mean, we can already see, and I will answer you guys' questions at the end, and definitely appreciate anyone who is, liking this and giving us thumbs up. You guys are awesome. So we will go back to questions. I see questions on, why do Trumpers or Q people say Trump's merging the Fed and Treasury to end the Fed? We'll touch on that towards the end. But yeah, I mean, you have Wall Street, who is very, very pessimistic, which usually they're usually always optimistic. And speaking of Wall Street, we have a confused Goldman Sachs no longer expect exit at the S&P to drop to 2,400, but sees no market upside either. And so you're playing a super dangerous game. I mean, you're in a market that probably has very little upside, in my opinion, and has gigantic downside risk. It was only a month ago that they're saying, oh, well, we expect the S&P to go down to 24. The other day, I think it just breached over 3,000 again, which is, what is it? I mean, I would say never go full, but they're, taking people down on all platforms, if you use the R word over here. And then central banks are buying, and this, ties into a lot of what John's talking about, but central banks are buying 2.4 billion in assets every hour as their balance sheets eclipse 20 trillion. And now America is actually started, tapering off a little bit on that, because now the Fed tapers daily treasury purchases to just a really small amount, John. It's only $4.5 billion a day, which obviously that's, it's an entire Ponzi scheme economy that's all predicated on this. And I think that all of these retail investors, sorry.
Yeah, well, it's actually not like, so where is this, like Fed tapers to 4.5 billion a dollar? Oh, treasuries, sorry. Yeah. I just saw, but they're also doing 4.5 in mortgage-backed securities as well on top of that.
And they've been buying ETFs from junk bonds since the last time that you and I spoke. And then one of those, I think I have the article on here where it shows that they were even buying. Let me see if I got it. They were trying to buy. Oh, here we go. Yeah. They're now the proud owners of Hertz bankrupt bonds. And so Hertz is the rental car company, as you guys all know. And and the Fed went and started buying ETFs. And I'm only listening since I am an SEC registered investment advisor representative. There's an ETF called HYG and JNK, which JNK stands for junk. And then HYG probably stands for high yield grade, I'm guessing. And I'm not recommending you guys buy these, but what the Fed was doing is going in and actually buying up these bonds. And what makes things even crazier is not only were they buying these bonds, but BlackRock, the company BlackRock, was facilitating buying these bonds. And BlackRock is
selling.
So BlackRock was literally offloading their bullshit onto the Federal Reserve and getting a commission for offloading their dog shit to the Federal Reserve. And then, and this actually goes to the remnants question over here. But if we have the Treasury is in a first loss position, meaning that, I don't say if, but, when the Federal Reserve starts losing money, probably for the first time ever, what's going to happen is now the Treasury is going to end up getting a bill, which was the exact, my language, exact fucking question that I posed to Janet Yellen 3 years ago during Brexit, when my congressman, David Schweiker out in Scotland, actually it was where I worked, so my congressman from where my office was at the time, said, "Oh, does anybody have any questions for Janet Yellen?" And the guy actually answered my question. And I only knew because I was listening to the Peter Schiff podcast. And he's like, "Oh yeah, really boring day, except for this one question that snuck through." And it was my question that stuck through to Janet Yellen through my congressman. And basically a lot of inside baseball, but he was an economics guy, so he actually understood what the question was. But it was something along the lines of the Federal Reserve gets to keep 6% of all the interest of all the dividends of all the debt. And they spin it as, oh, we give back 94% of the profit. And so what I was saying is, well, let's say the rates actually do go down, like you guys are saying it's going to go down, or let's say the rates go up, like you guys are telling us it's going to go up. Again, this is 3 years ago, not today. And so what I was saying is, okay, well, let's say the rates are at 0.25% now. You guys say they're going to get to 3% in the next 2 years. Well, what happens when you start paying out the banks 3%, but you're only collecting 0.25% in interest, and then you're going to be losing money on that. And then also the underlying composition of the portfolio is going to get decimated through interest rate risk, and you're going to get your asses handed. I didn't say asses handed to them, but what's going to happen? And now instead of having profit to send back to the Treasury, you're actually going to have a loss. And are you going to send a Treasury a bill? Janet Yellen's response to my question is that my scenario is mathematically impossible. I mean, an alien invasion tomorrow is possible. I mean, SpaceX supposedly just launched, I didn't see the live, but supposedly just launched their vehicle. That's possible. And not only was it not impossible, it was the most likely scenario, and it's happening right now. And so it drives me fucking insane that I called this to Janet Yellen telling me that it's impossible. Well, it's not even 3 years later, and it's already happening. And so we did not. So I know we jumped ahead of this, but the Fed did not merge. They made the Fed stronger. The Fed is what they're trying to do is own the world. They take a keyboard. They make up funny money that never existed before. Now they own money. Then they're using that money to then buy up assets. When companies default, like Hertz, who the highest lien holder is the bond holder. So what now? Like the Federal Reserve owns a fleet of rental cars of money they never had to begin with, and then the Fed is then owned by other central banks. And a little wound up right now. I was just playing tennis for a few hours, so got all the testosterone flowing through me right now. But this is just insane. Like I skipped ahead a few articles, but what were you saying, John?
Well, no, the Fed is buying everything. It's like my article that I wrote 3 years ago saying that the Fed will own everything, then nothing. That's what you're coming into, because they have to bail out everything. If they're going to keep and prop up the economy. Remember, Janet Yellen was also the lady that actually said that we're never going to see a recession in our lifetime.
Yeah, that was 2 years
Yeah.
ago, so that didn't age
Yeah.
very well.
No, but it's funny how like the actual timing of these central bankers and academics is the worst in the world. You know, you gotta lie. Either they're just doing that on purpose, just to be like really a-holes to everybody, or they're just completely stupid. It's either or. But you know, Tim, listen to this one. So this is like back in 2014 that I wrote this book, and of course now it's totally true. Because this is what will happen when you're totally dependent on thing, and now you're starting to print and buy everything. It's a little bit of a different scenario every time you start printing currency for different reasons, but printing currency always ends up in the same scenario. But here I actually wrote, together with fractional reserve banking, the people keep suffering from bad government policies. Together with fractional reserve banking, once again, a country and its people are on the brink of failure and loss of wealth for the 600 plus time. As you read this, the current Venezuelan bolivar may have ceased to exist or ended in hyperinflation, defaulted, or even revaluation. So basically devaluation is called. But so all those scenarios have happened. They actually created a new currency now in Venezuela. And let me actually share this with everyone, because this is pretty interesting here, Tim. What's happening in Venezuela? So they actually had a currency called the Bolivars Fuerte before, but then they actually had a new currency created, which was called the Bolivar Soberano. And now, of course, again, look at this, Tim. There's somebody interesting on the top of the inflation charts again, but a new currency just within a year of its inception. They're at 2,430.60%. These guys over there in Venezuela, and it's pretty interesting how. There again, who thought that people would jump on the bandwagon on a new currency that was exactly the same as the other garbage one? And look who's the other second perpetrator right now in inflation, Tim. It's this familiar face, isn't it? Actually, there's a whole bunch of familiar faces there on the top. Of course, we got Argentina. It's there. They actually just recently defaulted on their debt again for like, I don't know, the 100th time or something.
And now you can't even use their oil as collateral, because when oil is negative, it's like another liability then. So all the oil your country has, your country's actually worth negative something trillion.
Like Venezuela actually, Tim, was when I wrote my book, I wrote that their dependency on oil was the problem itself. And they were the major, that was the major factor, because they actually accounted in their budget for a price of oil being $130. How are you going to collect for a price of, negative 75? Tim, I'm gonna the government is gonna just print money to just pay people to get, I don't know, like it's just
that doesn't really bode too well for their petro currency that was supposed to be backed by oil. So now it's backed by
petro crypto, backed by negative.
Yeah, well, no, we do have a few more articles I wanted to cover before we start, I guess, this bullshitting over here. But, John, there was no, pre-show. We didn't do anything on this. But here we go. The arrival of the unavoidable pension crisis. And, I don't even need to read this, because I gave a presentation. It only has like 13 views on YouTube, because I was putting them out as podcasts, and I gave a speech, like literally rode my bike to Ernest Hancock's house. It was like 50 miles round trip when I was training for Ironman, and like one of the speakers didn't show up, so I just gave like an impromptu speech on the pension crisis. And the big thing is that I was talking about the bonds, how you have the interest rate risk, and when the underlying price of bonds go up. When the price of interest rates go up, the underlying prices of the bonds go down, and then you're going to have this forced selling. Also, I mean, these are just like the highlights. In 2008, the oldest baby boomer was only 62 years old. Now they're like 74 years old, and so they weren't forced to take money out when they were 62. Not forced, but if you're not retired, then you have time for assets to go back up. Well, now it's a different situation. They don't have all this time for assets to go back up. You also have you have something called sequence of return risk, which is the notion that the order of your returns is more important than your average returns. And so it doesn't matter if you average 10% a year, if year one, you're down 40%. I mean, if you're down 20%, I believe the math is you have to go up 42% over the next 3 years to get back to even. But by the time you've gone down 20% and you just retired, you've already shit your pants, you've already sold out of everything, and then you probably moved your money into bonds. And then when interest rates eventually, I mean, in a free market, their interest rates would be way the hell higher already right now. I mean, this is all just being distorted by the Federal Reserve. And so all these pensions, I think they will get paid, but that was how they're going to really, that's when the hyperinflation will really start, in my opinion, because this is going to be such a domino effect. And so they're just going to have to throw trillions at all of this in order to, quote unquote, fix things. But as they fix things, you're going to debase the currency. And then you're going to have the real problem when the currency isn't worth anything. But I think we are a ways away from that, because I think, not a ways, but I mean, like Jeff Berwick was saying it was going to happen like 2 months ago. And I was talking about how the dollar would actually get stronger during the initial phases of that. And you were front row when I was saying this at Anarchapulco, and everyone was basically laughing at me as I was talking about Bitcoin initially going down in the initial phases, 50 to 80%, which is what it did, and dollar getting stronger. Those were like 10 for that was like even everyone at Anarchapulco was like basically laughing at that. And then that's exactly what happened. But that strength of the dollar will lead to weakness, because if you're in Venezuela, or you're in Argentina, or you're in Sudan, or in all these other countries that have even more dog shit currency than America, and all of a sudden your currency goes down 50% relative to the dollar, and you borrowed money in dollars, then now it takes twice as much money to pay back those loans, and you're screwed. And so that strength is going to lead to weakness. Very very counterintuitive thing to think, but you have to always think of how the average person is going to react in these situations, not how us and the people watching this are going to react. But yeah, I obviously I think long term the dollar is screwed. But what do you want to say, John?
But I think every other currency will get screwed first. Of course, you're just talking about the pension problem here. Let me share the screen. This is from a report that I did back in October that I started here, and this is a map where all the states' pensions, how underfunded they are. And this is percentage wise over how much money they actually have. Look at California. They only have 66.5% of the pension money that they promised. Colorado 47.01.
Let's see Illinois.
Yeah, there we go. 38.4% of the money that they promised.
That was 2018. So if you go back to 2019, it was actually I believe it was 23% in 2019.
Oh, for sure. Yeah, exactly. So like the numbers have just gotten worse, right? And here, of course, this is Kentucky, 33.9%. They were the worst here. But again, like this just shows you like how underfunded like most of them are. Most of them are actually here. If you actually remove the top ones here, so like there's very few that are 100, as you can see. Then you go to 80 and 90 here. If we do like this, like there's not very many states. And then you go to 70, 80, you're getting a little bit more. And then 60, 70. So you could see like there's some states here that they're really struggling a lot. And as you can see, it just gets worse and worse. But this has been a problem all along. And as you can see, like I went into great detail warning about, the United States pensions. But it's not only them, Tim. It's everybody that are struggling with pension money around the world. If people ever think that the government is going to actually pay you pension money, look at I actually warned them. I did a video with Josh like way back, like this is like 2 or 3 years ago, where I warned about the Norwegian oil fund being in some terrible problems, because they last time in 2008, Tim, when they had a massive collapse, they had oil was at around $120. So they just funnel in the losses, cover the losses. They had 50% losses about, and they actually had the oil money to put in. This time, they had currently about 21, 22% so far in losses, and they haven't been able to cover it because the oil is basically under cost of extraction from the North Sea.
And one more point about the pensions, and this is something almost nobody knows, and I think I basically discovered this an accident about a year ago. But I was taking a look at my client's statements, because one of my clients had the decision of whether he could take a lump sum on his pension and take it all out, or just get the pension. I'm not going to, for privacy, not going to tell you what I was recommending or what we did. But anyways, I saw that there was something called a current funding ratio, and then like historical funding ratio. And I was wondering like what the hell that meant. And then I dug into it. There's something like 2015 law or 16 law that, it's called, like the Pension Prosperity Secure Act, because we love you. Not the Secure Act. That was something else I covered about a year ago.
CARES Act.
Yeah, but it was but basically what the gist of this is that pensions are obligated now to use a rolling 25-year LIBOR rate as the interest rate. Long story short, it means they could use like assumed bond rates of like 6% when like in actuality it's more like 1% or maybe even half of 1% or maybe like even 2, like super generous. So they're using these bullshit numbers, forced to use those numbers from the government that loves you, because it's so these funding ratios are using the bullshit numbers saying that bonds can like safely, like a treasury can safely earn like 6.5%. And there actually are IRS tables that you can go through, and it tells you what like the max that number that you can use. But I remember at the time, last time I reported on this, it was like over 6%.
What are they going to do when the LIBOR is gone? Apparently they're going to use SOFR now, SOFR, like, which is another interest rate, manipulated interest rate that the Fed is running currently. But it's, it's funny, Tim, how these pensions, they promise you how much, like some of them up to 8-9% returns. And now we're, looking at negative yielding bonds, basically, that, the pension funds are forced to buy because there's nothing else out there. And
then you get people like, CalPERS, who was actually invested in Nassim Talib's fund and then sold out of it right before all the shit hit the fan, in which that fund went up like 2,000%. And so CalPERS, I think that's a California pension fund. I think they're banking on like 7-8% type returns. No way they're going to get that. But, some other, this is,
well, they're underfunded by 60% or so, as it showed on my drawing. That was 2018 numbers, and now it's worse. So,
and then even some states, I think like New York, they're like, it looks like they're funded, but there's some sort of scheme where they were borrowing money from one area and putting it into another area, but that pension fund still owes another. It's like this whole scheme, but they look good on paper, but they're really not.
It's like the banks, they use special purpose vehicles and entities to take debt off their balance sheet. They actually, remember how, like, who was it now? I believe it was Greece. The way they got into the European Union was by Goldman Sachs playing with their balance sheet, creating these balance book entities that, they offloaded terrible assets to.
And then you had Goldman Sachs, former Goldman Sachs CEO John Corzine, who was betting against Greek bonds, or I'm not sure it was against or for. Anyways, he was on the wrong side. He was running MF Global, then stole basically his client segregated money to help cover these other bad bets. Gerald Celente was caught up in that. Another person
that's how Cypriotic banks went bust, because they were betting with derivative contracts, CDSs, on the failure of the Greek debt, and of course they got bailed out.
And Hillary Clinton's son-in-law also got caught up in this too, and he was on the wrong side of that bet as well. And his fund, I believe, went bankrupt or like lost like 90-something%. But speaking of like stocks that were going up, you had the company Moderna. I believe that's what it was called, talking about vaccines over here. But 2 executives at drug firm Moderna quietly sold nearly $30 million of stock when they unveiled coronavirus vaccine, and value rose before share price went down again. Surprise, surprise. I'm sure John could have a field day with this one. Central banks have created a fake market. Bank of America asked why anyone would expect stocks to trade rationally. And a completely fake market. I mean, it's about as fake as I've ever seen it. And so, the police killed George Floyd because he supposedly had, a fake $20 bill. How about you go kill I shouldn't say.
Don't say
that. Yeah. How about you go kill it on your next video and just do a really good job doing things? But, the Federal Reserve, they're the ones killing this economy.
They're counterfeiting trillions.
Yeah, by counterfeiting.
Out of thin air. And
like one of the only times I've been most afraid is when I had, a gun pointed at my head by going to like a Ron Paul rally outside of like one of these debates where the police put guns to her head, and I was holding an "End the Fed" sign, and I'm like, literally, this you guys are going after me holding a sign saying "End the Fed" when I'm the one trying to protect you guys. Like your pensions are, at least your pensions are gonna be worth nothing. Yeah. And now at least, everyone's going after, finally seeing, with the police what they are. Anyways, I don't want to make this about the police.
But Tim, there's good news though. Listen to this number. I just pulled up reporting, economic numbers from Trading Economics, and this was at 7:30. The U.S. actually reported personal income month over month, and they're up 10.5%. The economy is fine. What are you talking about here? Like people's income has gone up. Well, why has that happened, Tim? Oh, it's probably because of the fake money that was printed up and then shoved into their bank accounts.
I mean, I haven't looked at that stat, but sometimes there's other like BS that they do. Like it was like income per hour, but then the hours get slashed. Like the average hourly earnings might be up, but you're not working
but actually,
many hours.
Tim, the Economist consensus was negative 6.5%. So that's how bad they missed their target. The top economists. So I don't know. Like it's also here in Canada, you know, the GDP. It was funny. I was driving home, listening to the radio, and then they were like, "Yeah, you know, that's great news that the Canadian GDP, you know, they had a consensus at 10%." And they were like, "Yeah, but it's only, you know, it only lost 8.2%. So that's good news."
Maybe it's not good news because now it's less of a chance of the central bank, you know, going up another like 200% next month or whatever BS that they're up to. But, you know, let's just do a couple more of these articles over here. You know, fearing an imminent top companies flood the market with stock for sale after the close, you know, so they're trying to, you know, sell as much stock as they can while the getting still good for them. And then here we go. We can prevent a Great Depression. It will take $10 trillion. But the thing is, you cannot prevent this because the crux of the problem is that we have a debt crisis. And so money is debt. I mean, technically it's currency because it's not real money. And we did have an episode with James Turk, but the audio didn't come out on that. So we're going to try to get him on again, who is the founder of goldmoney.com. But the money is debt. And so I guess not money. So the currency we have in our pocket is debt. It's backed by debt. A treasury, in order to print money or digitally create it, you have to create a treasury bill, bond, or note, which is debt. It's a Ponzi scheme that can never be paid back from day one. It's high-tech slavery. I've got other videos on my channel. I think one of them is called like "Why We're All Slaves to Central Banks."
Comment on this here. Here you go. This is why we have a problem in the economy, because all that newly created debt is not moving anywhere, right, Tim? Look at this. This is the M2 monetary velocity. So how much it's moving through the economy. Take a look at that chart.
Yeah, I love how they stopped. And I love how they stopped publishing M3 like I don't know what it was, like 10 years ago. Oh, it costs too much money when it's like just bullshit. Like it's because you guys don't want to show what's actually going on. It costs too much money. And yeah, from the Federal Reserve, you know, that's rich. You know, especially off the backs of this article I was just talking about, where they said it will take $10 trillion. But all you're doing is getting the economy further into debt. You're getting the noose further around our necks. To tighten up even that much further. And so instead of jumping off a cliff that's 100 feet tall, now we're jumping off a cliff that's 5,000 feet tall. But at least the impact might soften the blow. Who knows? Or at least maybe the next time they release another one of these bioweapons, that maybe the bioweapon will be more effective, and there'll be less people around for that. Which who knows? But one last article, and I've got one other video I did want to show. So let me, and I've got like too many screens open over here trying to find. I got another TV screen here, so I'm trying trying to figure out with my mouse because one's on top of the other. But why colleges may be able to order students to get COVID-19 vaccinations. And so it's just so ridiculous. And you can see that all this is going to be tied into some sort of digital dollar. And and you got like Ellen Dershowitz out here, justifying, why they should allow this stuff. But I don't know, John, did you see? This is a crazy video. Not really, about, the financial stuff. But do you see the video of the Chicago mayor talking about a pledging?
No, I haven't. Let us see it here if you want to play it or not.
Yeah, and let me, because I think in order for you to hear it, let me make sure I've got the audio on this shared, so then that way you guys can hear it. So share screen. Okay, cool. I got the computer audio on now. Wham, bam, bam. There we go. All right, dude. You gotta see this. Here we go.
And you pick the people to run those agencies and the deputies that are pledging allegiance to the new world order and good governance. And then I think you have the inspector general do some spot audits to make sure that there is real compliance.
So her whole thing, like in the beginning of that, is all like we have all these laws, but you need people to comply with the laws. And then
look how great Illinois is doing. Chicago in general.
Not to mention, she looks like a fucking alien. I mean, or like Beetlejuice. That's what she looks like. She looks like Beetlejuice. I mean, this lady is just insane. We got Lori Lightfoot, Beetlejuice.
I don't know. You know what's interesting, Tim, is that you have like all these evil people. Like they don't look very good. I don't think being an evil person really is aging you well. over time, to be honest. Good people actually they have healthy bodies and so on. Like if you're hated by everyone because of all these evil acts that you do, and I don't think you're gonna have a good last part of your life, to be honest with you. I don't know.
Have you seen those videos where it shows like all these health ministers? It shows like the lady, and it shows like the lady in LA, and she looks, actually she looks like Beetlejuice too. I mean, I don't know what's with all these. Then like I think that was it the Norwegian one or the Swede. There was this like lady's like 400 pounds, and she's the health minister.
I think it's a Swedish, Danish or something. Yeah, whatever. But yeah.
And it's funny because I have some people who are commenting to me like, "Oh, hey Tim, I love all your financial stuff, but I wouldn't listen to you for all your health commentary, because Luke was on one side of the equation, I was on the other side of the equation." I'm like, all right, I would love to take my vitals and everything I'm doing and compare it to all these other people. When last time I had a life insurance test, I was super preferred plus. That was like in the top 0.5%, 7-time Ironman, like resting heart rate of 28. And people are like, oh, I wouldn't want to take this guy's health advice. And so, it's just insane. I also do want to point out that we had some people commented, they're like, "Hey man, I'd love to see that you're back. I thought maybe you got suicided because you were gone for like a month." And so, not suicided, at least yet. Just shadow banned and demonetized and all the other stuff. But it's a mark of
honor. But the question is that the look from your apartment, Tim?
It's actually not too different. I mean, I don't have the city view behind me, but if I was, I guess I probably wouldn't have to work too hard to like angle things to get that type of view. But
I'm just joking, but yeah.
No, on my to-do list is I need to create like a Tim and John, and actually right now we're in the after show at this point, so I'll probably cut this for the podcast. But for you guys still listening, if you guys have questions, you want to type that in, and if you guys are listening to this on the podcast, definitely appreciate it. And and so this will be, I guess, a YouTube exclusive right now when it comes to the question part. But if you're watching this on YouTube later on or right now and you're not subscribed to the podcast, you guys can go to thelibertyadvisorshow.com. It has all the links to, iTunes, Stitcher, Spotify, Podbean, I mean, almost every place that you can find different podcasts. But that's it for this Tim and John show. John and I will stick around and shoot the breeze for a little bit. But thank you guys for listening. I'm not sure how often we'll do these. None of these are really kind of pre-planned out. And if you do want to get a window into what we're thinking at any given time, make sure to join the Discord. That is bit.ly/Tim John Discord, all lowercase _ But anyways, thank you guys for listening. I'm Tipicho. This is John Snyson, the Economic Truth. And thank you guys. And we'll be around for another one.
Adios.
Okay. All right. Well, now we're just shooting the breeze, I guess, a little bit in the after show. But let's see if I missed any questions up here. Okay, we had Liberty First asked about the digital dollar and the coin. Well, sorry, he asked about the why did the guy from Coinbase join the U.S. Treasury? And so I think that happened on April 1st, which was also like right around the same day that Rashid Tlaib, which is a congressman out in Minneapolis, who then floated the idea of having a digital dollar, because the initial bill actually called for that $1,200 stimulus to be in the form of a digital dollar. And so very fitting that the Office of the Comptroller of the Currency, it was now I think it was Coinbase's either chief legal officer or chief information officer. We did change the news on that, but I did 98 change the news episodes over the course of not even 2 months. So I can't remember which one it was or where that was at. But I think the trial balloon is we're going to have a digital dollar. The digital dollar will then be part of a universal basic income. There's another bill in Congress right now where they want to propose printing 2 separate $1 trillion coins, which will then fund Americans making under $100,000 a year to then get $2,000 per month. I mean, you can't even make this stuff up. And then what will probably be then tied into, if you don't get your vaccine, you'll only get maybe, $800 a month as opposed to $2,000. And then they're going to keep ratcheting it up. And maybe that's not going to be like phase 1 of this, because, they need to get some sort of, frog boiling type thing to get people, invested into this. But yeah, I mean, there's just so much craziness. I'm sure maybe next, and actually we're trying to get guys like G. Edward Griffin on, so hopefully we can get him on soon, get some other, heavy hitters coming up here. I think we might have a couple other shows from way back in the archive. But let me see if you guys have any more questions.
Yeah, actually, Tim, here is talking about FedCoin itself is a familiar face, and this is from Mike Maloney's own YouTube channel here. Tim, is a FedCoin government Bitcoin coming with Mike Maloney. And then this is very interesting. Of course, this is if you could actually, if you want to put in FedCoin Mike Maloney, and then you can, I'm asking Mike a question, and he actually put this up on his main website because it makes total sense. The question we were talking about, and it was FedCoin. This is on March 1st, 2018. When we did talk about this question, going cashless, I've had at the time, did a bunch of cashless presentations, both in the United States. I did one at Edward Griffin's Freedom Force event that we had in Paso Robles. I did a presentation there. We also had none other than the Dollar Vigilante was there. Jeff Berwick had a presentation as well. But I was talking about the cashless.
You also gave one. You also gave one at on Kirk Chisholm's podcast, which will be out in probably like 6 days or so.
Yeah, I think exactly. Yeah.
And so if you want to take it off the screen, so that way the people got both of us.
Yeah, there we go.
Right now. But that one, I'll ask him if I can post it on my podcast or our podcast. And what I'm probably going to do is take the Change the News podcast and then reformat that into like a Tim and John Show podcast. But all of them will also be on Liberty Advisor podcast as well. So where was I going with that? Oh, so anyways, how the format of that guy's podcast works is, he's actually my business partner, but how it works is they have a guest. And so John was the honored guest, and then they have panelists. And so I was one of the panelists along with like a Forbes columnist from San Francisco and another San Francisco person. And right out of the gates, they're like, I think I liked what John had to say, but I decided to see what Paul Krugman had to say. And this was in like the pre-show. This is in the pre-show. I'm like, whoa, hold on. I just woke up. I don't get the good stuff out now. And then I was just like calling out their bullshit left and right. And this guy is sort of like the only person that could be my boss. And he was not very happy at all with how I was treating both of his fellow colleagues that he has on his frequent panelists. But you know what? I'm not going to let you guys get away with your BS and just they're like, oh, well, there's all these great jobs are going to be created through contact tracing. I'm like, oh, great. Yeah.
Oh, yeah. Great jobs. Spying jobs.
All these little brown shirt type jobs are going to be created.
Well, look, yeah.
Things are not really that bad.
Look at China. That's exactly how they work. They rat on each other. They have mass amounts of, Communist Party members that they pay to just be out and, rat on others. So nobody knows who's going to get ratted out next. This is just appalling what's happening with that contact tracing. We were looking at, if you, again, go to our Discord, I posted a while back, I get a lot of interesting emails from these big global agencies. This one was IATA, the International Transportation and Aviation Agency that the UN is actually running. And they were calling for the to commercial personal transportation to actually continue. They were talking about you're looking at a huge wait time, a lot higher prices, and of course immunization passports. They were talking about was one of the solutions there, of course, Tim. And then of course when you get into a country, an automatic tracing app you got to download, to be able to see where you are when you enter the country and who you contact, who you're in contact with, and all that stuff. That's going to be basically, they're going to try to force that on you of course when you enter the airport. And actually the interesting thing, I was looking at the 13.5 update of the iPhone, Tim, and I don't know if you've seen this or downloaded the new iPhone, the new iPhone, what was it called? The new software for your iPhone. But here, I'm just pulling it up right now because this is interesting. Of course, what even iPhone, and Apple has put out. Like, let me just read this because this is interesting. iOS 13.5 give you faster access to code, blah 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 blah, and exposure. It helps you also if you have problems with the like your mask with Face ID, apparently better, recognition there. But it says it also introduces a exposure notification API to then help the health authorities, apps, tracing apps for COVID-19. So it actually is underlined. They're putting in a tracing mechanism that, of course, you can turn off if you don't want it. But that's what they're adding, of course, Apple into their new software.
Well, same thing with Android. I did listen to a video the other day. It was like 23 or 28 minutes long, and it was going through someone that had gone through like some contact tracing course, and it was just absolutely crazy. All the different, just everything that we thought was happening, would eventually happen. But yeah, I mean, it's just absolutely ridiculous. And I think at this point, I probably want to get outside a little more, maybe go in the pool over here. Cause actually it was 111 degrees yesterday. And I'm not sure what it is today. It's probably like 110 or something out there. But anyways, the pools are back open. Arizona's back open. I was at a restaurant the other day. It was like, business as usual. Only one sheeple was there in a mask. Everyone else there was.
Also, had they removed completely like the social distancing and all that crazy stuff?
Now they had like tables that were spaced out, but then like the bar area wasn't. So I mean, like, okay, over here, and so like I've got like I've got like 4 pools that were within like a mile of my house, and 2 of the pools, and it's all the same like neighborhood, but they're like different, I guess, like governing bodies or boards or something. So 2 of the pools have all the furniture at it. The other 2 pools, they took all like the lounge chairs and all the fancy stuff out of it. So you just have to bring your own BYOC. You got to bring your own chair or towel when you get there. And so it's weird. So I'm like, okay, these 2 pools you can't catch coronavirus at, and these 2 pools, I guess it's a lawn chair.
Yeah, it's really funny. Like we have the same here. We have 2 stores that are totally right by each other here in Manitoba, and it's they got some form of social distancing in the one, but the other one you got to spray your hands, and there's like arrows on the floor to where to walk in the store. I always walk it like against the arrows just to be a little bit of an ale too.
The only time I wore a mask for like to walk through flying back from Acapulco to be a dick to TSA, which at the time people were like, oh my God, you did that, which at the time was sort of a crazy. I'm like, I'm gonna put on a mask, walk through, but this is February 19th. This is like way before people were wearing masks. So I was the only person to do so. And then
I remember being in Mexico City too at that time. And there was like tons of, especially like probably Chinese, because they had like 4 or 5 flights.
Oh, they were and both of us sat next to Asians on the way.
It was really funny. Not to be racist or anything, but yeah, it was just, it's just kind of funny how that worked out.
Yeah, no, and it was just crazy, but it's weird. They're like, they knew like more about this stuff like in Mexico than they did in America, because I taped it, but I'm not sure like the legalities of me taping the TSA. So, and this is actually my global entry interview to get the TSA global entry pass, which of course, just my luck, I get it February 19th. So I find like all these years I've been opting out, have them touch my balls in front of everybody. A lot of times we're going to kill you for prison or other ridiculous shirts. And so like so I finally cave in, because I'm like, all right, I'm going to be speaking at all these conferences. I might be running late. I don't feel like having to go through the body scanner if I'm running late or there's a huge line. So, I finally caved, finally got the TSA pre-check, which it took them from September to like, actually, my scheduled meeting wasn't until March, but I got one flying back in the country from Acapulco. So I'm wearing the mask, and the lady's like, "Why are you wearing a mask?" I'm like, "Well, there's supposedly a pandemic going on," which at the time, but that was like before there was like any hysteria about it, and so. And then I see like the government positioning it, and then I'm like, oh wait, now it just seems like this is nowhere near as bad. It's sort of BS. This is the steps of shutting everything down are going to cause way more deaths than because like this is not nearly as deadly as people have been saying it. So it's weird because some people who haven't agreed with me, it's like, well, it's funny because I actually own masks and you didn't. I wore a mask when you guys didn't, and then I wore another like a bandana I put over my mouth for like 5 seconds to get a haircut, and it was very crappy haircut. So you could probably it's a good thing I have the headphones on that you guys can't tell. But just don't trust the interview. And so we got T-Bro says, great to hear from you guys. You're appreciated. Well, thank you. We appreciate you. With the markets now bouncing around the 200-day, do you think it can maintain this ridiculous overvaluation? or is this just an extended bear bounce? And I think it's an extended bear bounce. I think, you throw $4 trillion at something, it's going into a very small amount of stocks. Most of those stocks, I think the stock market is down like 6%, but then the average stock is down like 13% because it's like those few names that are up a lot or back up to where they were before.
Well, Tim, actually, sorry to interrupt here, but this has got to be shared. So we were talking about, how they don't track the M3 money supply. Well, you can actually go to a really smart old man, and his name is John Williams of Shadow Stats. He actually does track this. Take a look at the increase here, Tim. The amount of increase, annual increase. Look at, it's like 35, 25% of the M3, Shadow Stats, and it's just ridiculous, like how much it's increased. And not to just mention that, let's take a look at the actual, because this is alternate data. Look at the unemployment rate in the United States, for example. Like, this is interesting. Take a look at this. Of course, this is the Shadow Stats one, is actually how they used to calculate the unemployment back in the day. And as you can see, it's 35%, Tim. Where the official, the red line there is 15. And it's it's pretty interesting. And I think that's why we're seeing a lot of people are angry in the streets, because the numbers are not even near what they're telling people that they are. And of course, here you could see like the official inflation is down, but it's still like at 3-point-something%. If you go and look at the official inflation, so there's a lot of things that are blatant lies to the people. And it's happening all around the world. And I think people are starting to get really sick of, basically getting told that, unemployment is fine. But then meanwhile, they're looking around and talking to people, and they're really struggling. We've been very lucky here, Tim, in the province here. We had like 292 cases so far of COVID.
Well, I just put in the chat. If you guys text Liberty Advisor to 71441, it's my book on how they rigged all these numbers. A lot of it was based off of the work of John Williams from Shadow Stats, which is the OG in this space. And then if you guys check out the first actually WAM video ever posted was on it was the second time I was on WAM, but the first WAM video that I actually posted was on my Anarchizona speech from probably like 17 months ago, talking about no, probably not, it's probably about 14 months ago, where they were talking about all the I was using Trump's own words, talking about the unemployment rate, also in the Anarchapulco speech from just February 11th, talking about that as well. And so and let's I think who we should try to get on soon for interviews. Let's try to get on G Edward. I think we've I've got John Williams' number. I talked with him in January, but then all this stuff kicked off, and one thing led to another, and never ended up talking with him. So let's get John Williams. I'll get John. I'll try to get John on, and then maybe Mike Maloney too. I mean, that would be another.
It would be great to get Mike on. I know that he likes to he's a very busy guy, but I'll talk to Dan Rubach, which is he's the guy that actually is his helping hand. He actually creates all the videos and everything for all the hidden secrets of money and all that. Really impressive stuff that they put together. Him and Mike. You just got if you want to understand how money, the monetary system works, you got to look at Mike's video. But the problem is that Mike's video now is obsolete of one part of it. And that is the part that talks about fractional reserve lending, because that doesn't exist anymore because there are reserve policies. So basically, there's no need for reserves in any banks anymore. It's the same as Canadian banks that are boasted as the most solid in the world. Meanwhile, they're getting repoed through the roof. Basically a 16-fold increase in overnight repos, and everything is fine, right, Tim? The monetary system is totally fine. This is the thing, like what they don't understand, and this is guys like Paul Krugman as well. He says money is debt we owe to ourselves. Well, that's the only case as the government do not. Every other debt is owed to the bank or to anybody else. You can't just you can just keep on increasing that debt. And then the problem is like productivity is stagnant, and then salaries are stagnant. What do you think is gonna be the happening there? It's gonna be like France, where people were out in the streets before the corona. Well, actually they're out there every now and then, I think, but like it was really crazy there for a while, and people were out in the streets because the reasoning was that I can't put food on my table. when that happens, and I actually talking with your colleague there, Kirk Chisholm, as well, in that video. The reason, and this was also back, like this is all the way back to the French Revolution era. It was all based on, people couldn't afford food with the currency valuations that was current, with their salaries being not enough increase of what the actual inflation was. Currently, though, we do have deflation in the economy because of all this debt, but the problem is that inflation is getting, it's not really happening because it's getting stuck at the central bank. Basically, when they bail out the banks, they buy up the bonds, all these assets. What they're doing is just swapping it from fresh cash, but they're sticking that cash for a tiny minuscule return at the Fed's deposits, which is the bank's deposits. You know how you have deposits in banks. That is actually where the central bank, where the banks themselves have their deposits. They have them with the central bank, and of course, they need zero cash, physical cash on hand on the reserves with the deposits. I got in so much, I got in a heated debate with a banker that claimed that, if we took out cash, on the economy, there would be no problem to replenish that because they could sell other assets. But the problem is, like, you could sell all the assets you want. If people want cash and you have, a lack of cash in general in the world, and people want cash because they don't want to be in the banks, that system is going to fall apart pretty quick, because you can't just sell your assets that you have, the short-term debt or whatever. What if they don't even want to buy that debt because nobody believes that debt will have value and is an investment anymore? You can have a severe problem on your hand when you do that. And I don't think there's like the sustainability of the whole banking system with, the belief that we can just keep on printing currency. And as you saw with that M2 monetary velocity, which how fast it moves through the economy, is at record lows because of what I just said, that, the central banks are getting fresh cash, but there's the banks are getting fresh cash, but they're just stacking it all into the all on the deposit account of the Federal Reserve. It's not moving into the economy whatsoever. The other thing, though, is that also happening is that people are saving. They're not spending nearly as much as they did before because they can't. They're full of debt, but they also have to save money now. They're in a big saving mode. But the thing is, Tim, when that saving is over, when all this universal basic income is shoved out suddenly into the economy, when people start to believe that, everything is starting to get fine again, that's when you can have the hyperinflation as well, Tim. Isn't that correct? Like, that is very much, what happened in Weimar Republic, where, they were under heavy pressure and really struggling. People started to save. And then suddenly people, started to feel comfortable again. And then they started to spend. And then suddenly all that money flew right back into the economy as new, fresh money. And prices just skyrocketed.
Yeah, and if you take a look at their stock market, I believe if you go back to like 1911, I think the German stock market was like 300 or 400, and then by basically 1920 it was like 21 million, and then by 1922 it was like 27 million, because all of it basically boom, all hit at once. And that, could be what happens to America, where once the money comes back in from overseas over to America, it all ends up hitting at once. But but the thing is, if you were holding on to their version of cash at the time, originally they had the I'm not looking at any notes here, but it was the Renmark, then Reichsmark, then Deutschmark. I think it was Goldmark, Renmark, Reichsmark, Deutschmark. So if you're holding on to gold marks, your ass got wiped out. But if you're holding on to like something like Mercedes-Benz stock, which was around back then you're now, instead of having 100 shares priced in gold mark, it'd be priced in Renmark. Then when Renmark collapsed, it'd be priced in the Reichsmark. Then when Reichsmark collapsed, it'd then be priced in the Deutschmark. And then from Deutschmark, obviously now into the euro, which was a plan that they had at the 1956 Bilderberg meeting. And I think like even Etienne Davigny even admitted as such. But anyways, definitely appreciate everyone, everyone who, has been commenting and liking and sharing our videos. John and I have both had, a very rough month over here, but I was sharing more articles, dude. I want to go to the pool. When are we gonna
just one more thing. We were talking about the stock market. Just one more thing. This is hilarious. Look at this. Who's invest in the stocks in Venezuela? Look at this. It's back up again. It's almost beating the new record highs. the old record highs with the old current. You were just talking about the valuation in the stock market. It doesn't matter how high the stock market goes. It just shows you that the value of the dollar or any other currency is going down, Tim. It's just that last. I just had to share it, Tim. It just since you were mentioning it, I just had to like show people how crazy a stock market could be in hyperinflation. It doesn't matter like what the stock price is, because the dollars that is priced in, it's worth nothing.
Yeah, I mean, you're just trying to be a least worst off in that type of scenario as one of the many hedges that people should have on. And we see somebody, Mickey, commenting no super chats. It's because this channel actually has not been actually watched enough to I think it's pretty close to it, but it has enough subscribers. It has there's a lot of criteria you have to meet, and part of it is I don't even know if I will monetize it or I will try to get super chats, because then it's just one more leg they try to use against you, because like, oh well, you can't do this and this and this and that, or else we're going to take it away. But I'm just like, well, fuck it, what if I just never monetize to begin with? Then you guys can't take it away. And it's also, you see people who get their livelihoods, not that I'm banking on that happening, because obviously in this type of environment they're not going to be promoting these types of messages, especially when I'm writing in the comments about how agent provocateurs and the starting these riots and things like that. But everything we're talking about are things that they don't want you hearing, especially when it comes to the money side of the equations, because you can mess with a lot of their things, but when you start messing with their money, that's when they really want to shut you down. And also when you're calling out the BS from both sides. So you're better off if you're just focusing. And I'd be a lot more popular if I tried to just play the Q angle of this, or just play the the Trump angle of this, and just
or the left angle. Yeah, exactly.
Or you'd be a lot more popular if you play the left angle. I mean, I went to a liberal arts school, and like I've been defriended by like 90% of people I went to school.
That's what you see. So that's what a lot of people angle towards, because they know that they could get so much more popular if they actually do go that route. And it's unfortunate.
Like Stefan Molyneux, big sellout. I think I saw a tweet the other day, or from yesterday or today, where the tweet was, everyone who's mad about George Floyd's death, he died of underlying causes, and you guys are murderers for all the rioting that's going on. So now, Mr. Anarchist, Stefan Molyneux. It's funny because I was like a libertarian, then Trump guy that became anarchist, and then he was an anarchist that then became a Trump guy that then became a statist. So it's like Stefan Molyneux and I like basically switched spots. So it's sort of funny how how that all ends. But him and guys like that, and Cernovich, and and Alex Jones, they know where their bread's buttered. They know where they're getting their money from. Yeah. They know what is going to get likes and not. And we both have to be way more popular if I just kept going on the Trump train. But,
it's more like they're slaves to the system, really. Like they just become slaves because they're dependent on the system itself to feed them, and then they have to tell what where they could actually get money to survive, because they have to survive that way. With me and Tim, it's more like we do have like Tim has a lot of money. I have my money from my work, but
I don't have a lot of money because I lost my job in 2018 when.
But you do, you're doing not bad. Like
I have a decent amount of income, but that income I'm paying off debts from before. So okay. But the thing is, I want to be in expansion mode. I am in expansion mode, but it takes money to then hire other people and other 100%. Advisors and other media people. So it's I should be one of the biggest financial advisors around. Went up 26% ish last year, and then was only down 3.5 to 5 this year at the worst. How many financial advisors could say that? And that's not counting clients outside gold holdings.
Well,
have with us, but.
Tim, when the second wave comes, and we're not talking about the second COVID wave, the second downturn in the economy, where you're actually going to see a lot more volatility and turmoil happening. That's when you're really going to see people panicking, because like, oh, we should have listened to Tim. We should have come over earlier. And now they're panicking, because that's what happens with people. They think that they could time it and then just be right on time.
And you have your opportunity. You have your mulligan again. It's crazy that the stock market is only down 6% from all-time highs, which is a great place to be at. So you know what? You could go put everything into cash, help move it over to me, and we can get you on a better path going forward if you don't know what to do, or maybe not even you, but if you know someone that's, and I'm only taking on libertarians and anarchists right now because, anyone who's not going to get freaked out by all the stuff that I put out, and they're getting offended. And so even if you look at like scheduling links that I have, it's all basically red pilled stuff. And so that is there. People are like, oh, we're going to scare away some people. I'm like, yeah, it's meant to qualify. I'm qualifying them, not the other way around. Yeah. And they've got people like like my dad are like, oh, I see you talking crap about the police. You're not going to have any police's clients. And I'm like, well, I don't want any police's clients. So, yeah. So, you know what? I'm just trying to tell the truth as I believe it and try to, you know, make people, you know, as best off as they can, given these circumstances and given the hands that were dealt, because this is, and if you don't, and guess what, if you got your ass kicked in 2018 when things went down, got it kicked again in 2020 when everything went down, and your advisor is telling you everything is great and don't worry and just, you know, be long, it's always the best time to buy is yesterday, then, you know, appreciate someone looking around. But yeah, I mean, it's good to have, and then some people are like, oh, well, this guy's only making videos so he can get clients invested. Well, go back to the first like 3 years of podcasts and almost had like no ads at all. And you know what? That way my message isn't being tainted by outside sponsors. Not saying having sponsors is a bad thing, but you know, no one's, you know, cutting my checks. And I say stuff that has pissed people off. I've actually pissed off two of my biggest clients I had in 2018. Where one guy said I was too pro-Trump. Another guy said I wasn't Trump enough. And I lost two of my biggest clients because I was that anarchist. I was that guy out there saying this stuff that they didn't want to say. And you know what? They should have stayed with me because I can pretty much guarantee they both got their asses handed to them. And one guy was trying to get into like all these different, you know, REITs, which, you know, the REITs just absolutely got killed the past few months. But oh well, you know, can't win them all. I'm not trying to be everything to everyone. I'm just trying to, you know, just go after the niche of people that, you know, we're working with over here. But it's great to, and actually I did just make a library channel, Mickey. So I've got one video up on library. It is the Judy Mikovits interview that we did where another person whose name rhymes with puke did not want to be in that interview. Well, he was in the interview. We shot it actually before pandemic came out. So I have known Dr. Judy for 4 years almost. Shot the video March 31st. She really didn't blow up until about 2 weeks after that. And other person didn't want to release the video. And then she became like the biggest story in the world. Still didn't want to release the video. And, you know, that was part of the, you know, I'm like, you know, if I want to be, you know, censored, I would, you know, go work for CNN or,
exactly.
YouTube. So, you know, that video with the other person censored, it can be seen on library. It can be seen on Float. The links to that are also, it can be heard on my podcast as well. It's not on BitChute because BitChute, it's being processed on BitChute, but it's been processing for 8 days. And I have a gigabyte fiber connection, gigabyte up, gigabyte down. So if I can't get it to load and I'm a silver gold star subscriber to BitChute, then who the hell can? So I'm very frustrated with BitChute. But anyways, yeah, there are ways, but yeah, subscribe to the podcast feed, text the number that I told you guys about before, all backup methods of communication to be able to stay in touch. But yeah, there is one library video now. You guys can check it out. It is the band Dr. Judy Mikovits interview. Highly recommend you guys check that one out.
Yeah, no, 100%. It's all about trying to get this information out, but being dependent and being a slave to YouTube and so on. And that's the problem. Actually, one of the ways you could support me is you could go to my website, theeconomictruth.org. I have several reports there. I have one on the Australian economy that for all the Australians out there, you should really read into it. You're seeing a lot of what I wrote about back then, but I think the report is still now as valid as it was back like 2 years ago when I created it, because it talks about a lot of ways that you could potentially hedge yourself. Of course, all of that is my opinion, but I think my opinion is you know, just based on facts and based on, you know, looking at economic data. And then, of course,
it should only be based on emotion, John. We don't want to throw facts into this. So
yeah, and these, of course, are two of the books that you could buy. If you don't like to support Amazon, you could actually buy these books through me myself, and I'll ship them out to you. But actually, one of my books is doing really well, Tim, on Amazon. It's always like one of the top books on macroeconomics. I'm beating, you know, Paul Krugman and others that have put out the books, which is, you know, quite fun. Guy Standing, I beat him all the time here in Canada, which is the guy that, you know, promotes universal basic income. But it's a very simple book.
Does he sell his book on the internet that he said wasn't going to have any more relevance in the fax machine?
Yeah. No, it's really funny. Like in this book, though, I talk about everything about the problems with debt in Canada. And then also I do have, like, if you go and actually read my book, I have a, let's see what the chapter, I forgot what the chapter was called again. You know, this is probably the most important chapter because it's chapter 13. It's how the elites plan to steal your money. And I talk about, you know, the United Nations push and all this stuff and how the United Nations.
It's funny because in America, Chapter 13 is actually one of the bankruptcy codes. So it's filing for Chapter 13 bankruptcy. Yeah. So I didn't know if you knew that. Yeah.
No, I do know that, Chapter 13 bankruptcy. And then, of course, there is a lot of interesting things with, I believe it's paragraph 13 in the Federal Reserve Act as well that they're using currently to buy up all these assets. If I'm not wrong, I don't remember if that's the paragraph, but they're, you know, quoting that to do the PMCCF and SMCCF, which is basically buying, we were talking about bonds and so on. But yeah, this book is actually doing really good. It has, you know, ended up having 4.3 stars out of 28 reviews. So I'm pretty happy about that. And I think that if you live in Canada, you should, you know, even buy this book and give it out to other people, because people need to hear what I have to say in there. You know, it's kind of a warning. And actually, it says Canada greatest economy in the world, question mark. And it says the facts you're not being told about your money and how to protect yourselves from the coming crisis. Actually, we're right in the crisis right now, but there's still, you know, very valid information in there that could help you understand both money and understand what is coming if we, you know, not start to stand up for ourselves and become true individuals and see what the government is doing to us, because they're really devastating the world. All this money, like look at here, Manitoba, 300 million deficit was the last year's deficit. Now it's 5 billion. And it's just insane. Like this is just a, you know, how are we going to pay this back ever? You know, either you're going to have mass taxation or they're just going to keep on printing money until that money becomes worthless. There's just two ways out of it. And probably going to see both, but there's no future in the current economic monetary system, unfortunately. You know, people are clinging to it and hoping that, you know, we will survive, Tim, but I don't see like the sustainability through looking at, you know, history. There is no way to try to prop up, you know, this dead system, and it will eventually, you know, just fall apart, Tim. That's how I see it, and it's not to be dystopic or anything, but it's just making common sense out of, you know, all this currency printing and everything. And as we showed you all the stats, you know, it just makes sense that it's coming. But of course, you can protect yourself. You could, of course, talk to Tim. Tim is, you know, a very smart guy when it comes to how to, you know, actually lay out a plan for people, because that's what people need right now. They need a plan because if they're with, you know, the regular sales guy with their, and this is unfortunately just in the United States that Tim is, and able to take clients. But if you are not preparing yourself, if you are, you know, with the regular investment guy, that's just a sales guy that are, you know, being told to sell these different, you know, products that they have, which most are, you know, it's probably like, I don't know, 95% of advisors, probably even more, Tim, that, you know, are just parroting what they're hearing from the upper echelons. And there's very few left. Like, actually, I'm lucky. I have a,
yeah, like when I passed my Series 7, my boss at the time was like, "Why'd you get like whatever score I got?" He's like, all you needed was a 71 or 81. Like you studied way too much." And then they would say things like, "Listen, the smartest guy is also the brokest guy. It's better for you to learn how to sell that," which they're actually right, than it is to you know all the ins and outs. So I spent a lot of time struggling, not being, you know, wealthy from like a financial advisory standpoint, because I was learning all this information. And now I'm at the nexus point of having things like YouTube where the business is skyrocketing, but, you know, it's making up for some lost time for some other things as well. But anyways, dude, I really need to get to the pool. This part, I've got 3 bright lights shining down at me right now. And
it's hot there.
Need to take my need to also take my dog for a walk. And I was thinking maybe doing like a walk and talk and sometime, not right now. It's way too
be careful with that cactus though. It looks dangerous.
Yeah, it's a big middle finger cactus, or where I guess it's over there. But yeah, I was thinking of doing like a spoof video of like, and I have done some walk and talks to my dogs before, but doing one where I love what Jeff is doing, where he does one with like Lucy, where he's.
I should do one too.
I saw one on Instagram where he was like, "It's Jeff and Lucy and tacos," and then he's like, and so I've got I have a very similar golf course trail that's literally like 20.
I have a golf course too right there, so there we go.
And actually, I've got both.
Let's do it.
I don't even golf, but I've got golf courses in like both directions. But yeah, one's like 20 yards this way over here, and Yeah. And so I'd be like,
it'll be Sasha and John, and then what's your dog's name? You know, we'll do our walk and talks with our dogs. So that's
we could do
a
a Zoom walk and talk. It'll be Yoshi, Satoshi. Yoshi. This is Yoshi and Tim and some tacos. So, anyways, I don't know. I do like those videos. I don't watch very many of them, but I did see like the little clip on Instagram the other day and thought it was hilarious. But anyways, thank you guys so much. I was trying to get John off of here like an hour ago, no, like half an hour ago. But anyways, thank you guys so much. I will talk to you guys later.
Have a good one.